Hello and welcome to The Mint. I'm Cecilia Kamputa and we're joining you live from our Z10 studios in Harare, Zimbabwe. Now ahead on our show, in Zimbabwe, where inflation and currency issues continue to have an effect on investment decisions, gold is regaining its appeal as a strategic asset and safe haven. Local investors are closely monitoring global bullion trends, especially after gold surged 26% in US dollar terms in the first half of 2025. The World Gold Council Media Outlook attributes the rally to a weaker US dollar, persistent global inflation, and heightened geopolitical uncertainty, factors that are reshaping portfolio strategies across Africa from Harare to Johannesburg. The RBZ, like many central banks on the continent, is expected to maintain a bullish stance on gold to cushion against fiscal and currency instability. When we come back from our break, I will be joined by Tapu, a financial and investment analyst, as well as Natasha Mutasa, a CFA candidate. Now, don't go anywhere. The Mint will be right back. Welcome back to The Mint. I'm Cecilia Kamputa. We're joining you live from our Z10 studios in Harare, Zimbabwe. Now, according to the World Gold Council's media outlook, on the broader global stage, gold has outperformed nearly all major asset classes this year, drawing interest from both institutional and retail investors. Now, central banks continue to diversify away from the US dollar, while gold ETFs posted a 41% surge in inflows, reaching their highest asset levels since 2022. Now, analysts note that gold's trajectory in the second half of 2025 will depend on key macroeconomic shifts ranging from stagflation and further rate cuts to possible geopolitical easing. As African and global economies brace for uncertainty, gold remains a vital hedge and a key indicator of risk sentiment and monetary confidence. Now, as I alluded to before the break, I'm joined in the studio by Tapu, a financial and investment analyst, as well as Natasha Mutasa, a CFA candidate, to take a deep dive into the report. Tapu and Natasha, welcome to The Mint.
Thank you.
Thank you for being here. So, to get into our conversation, I'll start with you, Tapu. Zimbabwe saw a strong investor interest in gold in the first half of 2025. Do you think that this trend is going to continue into the second half of the year?
Oh, thank you. You know what, Natasha, in Zimbabwe, we have a lot of inducing factors which drives our appetite for investment in gold, especially if you look at the state of our economy. It's not that stable, you know, and historically in Zimbabwe, we have an experience of inflation. So for a lot of investors, both retail investors and the wholesale investors, they try to find a way to hedge against inflation. And gold is one of the assets which is regarded as an inflation hedger. So I believe that in Zimbabwe, we need a lot of gold, and investors, because of those historical factors of inflation, hyperinflation, they are willing to hold a lot of gold. And another factor, you know, our currency is not yet that strong, and it's backed by gold. And the central bank's appetite to boost our gold reserves in Zimbabwe is very high. So we are likely to see an improved in demand for gold in Zimbabwe for the upcoming second half of the year.
All right. And Natasha, how is Zimbabwe's evolving currency environment? You talked about how we also have a history of inflationary and currency issues. How is the evolving currency environment shaping investor confidence in gold as a strategic asset?
Okay, I think just to add on to what you were saying, the gold still remains as a symbol of stability indeed in Zimbabwe with monetary reforms, but however, investors' confidence hinge on other things other than gold monetary reserves at the RBZ. We have issues such as clear convertibility mechanisms. There is need for credible fiscal and monetary governance. You know how our country there is policy instability. One day we have something that's being issued, another day there's something different. So it's more than the reserves being there in RBZ that's going to build the confidence of our investors. And also there's need for transparent reserve reporting and policy consistency in the country. This will build up the confidence of investors, be it foreign investors or domestic investors. Thank you.
All right, and Tapiwa, how might Zimbabwe leverage its gold output beyond export revenue? Perhaps maybe sovereign wealth strategies or inflation hedging reserves?
Yeah, I do believe that we have an advantage in Zimbabwe in terms of our reserves. We have a lot of reserves. We are good, and our revenue, that gold export revenue is quite good. But what I think is that we need to diversify our sector investment. I think if we manage to use those revenue we earn from gold export to boost other sectors so that we may run away from those concepts like the paradox of plenty, the Dutch disease, or the resource case scenario, whereby we have a lot of resources but we fail to develop due to the fact that we concentrate on one sector instead of diversifying our investment to other sectors like manufacturing sectors. We need to use those remittance to boost other sectors like manufacturing sector, agriculture sector, so that we manage to diversify our economy as a whole. Thank you.
All right. Now, Natasha, mining countries in Africa, maybe also including Zimbabwe, are they missing opportunities to link their gold production to financial market productions? Like what you were saying, that a country might have a lot of mineral reserves but still remain poor. Are African countries missing that, or where are they missing the link between having the resources and success or thriving?
Okay, yes, there is underutilization of the financial potential in the gold production that we have as Africans because we are not fully integrating it into the capital markets. We have situations like limited financial instruments where we are exporting our gold in raw form. But this results in us losing the opportunity to add value to our financial products. For example, we could have ETFs or sovereign gold funds.
All right, and
thank you. Just to add on that one, I concur with Natasha. African countries, they are not adding value on their gold, and I think some of the countries like Burkina Faso of Captain Brahim Traore and the Botswana for Boko, they are trying to transform their gold into something which is more valuable than exporting raw gold. That one will boost our revenue in terms of gold exports.
All right, and still on Natasha, when we're looking at inflation pressures being projected to remain high globally, what policy moves could threaten or support gold's current momentum, maybe locally or even globally? Like, yeah, maybe if you can speak on that, and also Tapiwa afterwards if you want to take it.
Okay, you said locally and also internationally.
Yeah.
Sorry, internationally. Yeah, I think locally the policy, one of the things, unfortunately, locally, I'm not sure if we really have policies that can really help us influence people to invest in the gold, given the instability that's there, or even also the lack of transparency. But however, I believe RBZ has already issued quite a few of these policies that help support the gold investments in order for investors and institutions to invest in gold in order to hedge against any losses or in terms of currency. We also don't only have inflation in our country, we have also challenges with our currency. So to hedge all those risks, gold would be ideal for people to invest in. But I think the the major factor for me is the need for transparency, the need for consistency, because we could implement a number of policies, but there is lack of transparency. One thing is say today, tomorrow there's a statement that's being issued. Some of the statements are even issued in one day. We have scenarios where statements have been issued in one day. So that also creates a lack of confidence.
Okay.
So other than the policies that we could issue as it, but internationally, I know a number of countries in the first world countries, they normally have consistency. They know what's going to happen. It's predictable. They can use tests. They can run tests to make decisions. So yeah, I think when it comes to locally, that's where there's a bit more of a challenge. But internationally, the policies that are already there are already helping investors that are trading on the international markets.
All right. And Tapu, would you want to take that?
Yeah, I believe locally we need a sort of stringent measures in terms of controlling the gold flow, especially outside the country. We need to manage those loopholes, which causes a lot of loss in terms of revenue due to smugglers. So I believe if the central bank and the government of Zimbabwe try to play around their policies in terms of control of gold flows outside Zimbabwe, will do better.
All right. And are there any risks of a gold price correction if central banks slow down their buying pace? And how vulnerable is Zimbabwe's gold strategy to shifts like that if they do happen?
Yeah, I do believe that at a certain point of time in future, a gold price will revert to its own original mean. And I'm sure if our country concentrate their investment mainly on gold, we are going to face a concentration risk. So that's the reason why I said we need to diversify. Because if we concentrate our investment only in gold, surely when the gold price take a downward trajectory to its original mean, based on that mean reversion concept, we are going to face some challenges, and we are going to face some trade balance instabilities or trade imbalances.
All right, then.
I think just to add on to what he was saying, agreement to what he's saying with regards to if there is a price correction, it means less people, the demand for the gold reduces, which even makes the price a bit more expensive. And if we are only centralizing on investing in gold as a nation, it might become expensive for us to invest in that gold, given also the US dollar is not our own currency. Our own currency, say it's the Zimbabwe gold, but as we need to first receive the the US dollar, then we need to use that US dollar to buy the gold reserve. So I agree with him when it comes to diversification, that there really is need for diversification in order for us to not face any challenges in the future as a nation.
All right. And how can Zimbabwe better align its national reserves and financial policies to leverage the global momentum in gold investment now?
Sorry, do you mind repeating that?
All right. How can Zimbabwe better align its national reserves and financial policies? Like, if you said there aren't really clear policies, maybe how can it tweak whatever it is that is already there, like frameworks or policies, especially from the RBZ, to leverage the momentum that is there globally in gold investment?
Okay, in order for that, so in other words, I think you're asking towards how we can best benefit from the momentum that's already there with regards to the gold market.
To reap something from the momentum that's already there.
Okay, I think currently it would be wise for us to gradually accumulate a number of gold for our reserves. But however, in as much as we are going to gradually accumulate, given the normalization that's there right now with the momentum, given also the predictions that were recently released, they could be a scenario where it was going to take time for us, for the gold price, like you said, to revert back to their normal prices. But of course, they're going to revert back to their normal prices. So as a nation, we may need to gradually accumulate more gold, but also including some diversification in other assets such as oil, the oil industry, the energy industry. I know also as a nation we have things like lithium, so that's how best we can protect our national reserves. We hedge against any losses in the scenario where now there's a price correction, and we can also leverage from this momentum.
All right, can you speak on what the current weakness of the US dollar may mean for gold in Africa, especially in countries where the local currency is depreciating?
Okay, in currencies where local currency is depreciation and they do not also use the US dollar, or where they also use the US dollar?
Where some use the US dollar, but just generally what the weakness in the US dollar generally means for gold in Africa.
Okay, so already the weakness in the US dollar has encouraged people to buy because there is now a reduction in price of the gold. So for African countries, we can also take this as an opportunity to accumulate more gold for our reserves. However, for those with local currencies that are also depreciating against the US dollar, I think we have countries like us who base our exchange rates also on the US dollar. It also comes back to us finding other means of hedging these losses through other use, because if we are saying our own currency already does not have strength, and the one that we have adopted also, the US dollar, is weakness, it means we as a nation, economically, we are probably doomed, and there is need to find our ministry and our regulatory, such as the RBZ, they need to find other means of hedging this challenge that we have as a nation, and also other countries in Africa. But I know, like nations such as Nigeria, in as much as their currency does not have value, they hedge against their own reserves. They're only not based on the gold. So we also need to find what else is a nation, because this also affects our imports. It affects our exports. So we also need to find out what us as a nation can use also to hedge against these currency weaknesses, be it the USD or our own local currency. Same applies also with the other African countries.
All right. You want to add anything before we go for the break? All right, now time for us to take a breather. When we return from the break, we look at the global gold market and the outlook for the first half of 2025. Don't go anywhere. The Mint will be right back.
Didn't graduate. I guess I blew it.
You couldn't advise him anything. He would just look at you and say, so who do you think you are?
We were just like really spoiled.
And then they just give me the receipt and I'd pay.
That guy walks in one day and then he says that he wants to make a movie.
He was blowing the money.
There was just like this habit that he had where as soon as he got money, it was gone.
I just didn't have the skills or the experience.
This money, I could see it disappear so fast.
You're still watching The Mint. We're joining you live from our Z10 studios in Harare, Zimbabwe. I'm still joined in the studio by Tapu and Natasha Mutasa, taking a deeper look into the 2025 World Gold Council Media Outlook. So, Tapu, I'll throw the question first to you. When we're looking at the report, it suggests that gold rose 26% in the first half of 2025. What key global factors do you believe contributed mostly to this rise, to the surge?
Yeah, thank you so much. There is a lot of factors which is triggering an improvement in gold price, or which puts a lot of pressure in gold price. First one, there is an issue of geopolitical risk. There is a geopolitical crisis between Ukraine, Russia, Israel, Gaza, Israel, Iran, India, Pakistan, even the global economic powerhouse like United States of America and China, and the uncertainties surrounding the behavior of NATO given the conflict between Ukraine and Russia. Usually the central banks have a tendency of chipping and try to loosen their monetary policy in trying to finance those conflicts, and in doing so there is a risk of inflation, and we all know that inflation is regarded as a natural tax in terms of in investment arena. So I do believe that those issues to do with inflation risk triggers investors to run away from currency-dominated investment to gold, in trying to hedge their investment from the inflation risk. We all know that the risk of inflation is erosion of wealth. So to protect their value in terms of their portfolio, automatically investors, high net worth, sovereign states, whatever, they try to hedge risk using the inflation hedgers like gold. And also we have issues to do with the behavior of other global economic powerhouse like the Trump effect in the United States of America. It causes a lot of shock, especially if you check on the Wall Street. That shock is causing a domino effect whereby the problem in the United States is cascading to other economies, down to small countries like Zimbabwe. So those issues to do with uncertainties in capital markets drives the appetite of investors to invest in equity market down and trigger them to move or to shift to gold as a safe haven in terms to protect their investment from those made domestic and international policies from those governments like United States.
All right. So the council outlines different possible scenarios in the second half of the year when we're looking at gold. I'm asking the question to both of you. So the first scenario is normalization with continued general uncertainty in the market environment. The second one is deteriorating conditions where for gold to continue its upward trend, economic or financial conditions will need to deteriorate further. And then risk resolution with sustainable geopolitical and geo-economic conflict resolution, reducing the need to keep hedges like gold. If you want to start, Natasha, which do you see as the most probable scenario playing out in the second half of the year?
Okay, I think the first scenario, the continued normalization with persistent uncertainty. Already this one aligns with the current market consensus where macroeconomic indicators and geopolitical realities are still there. Like my colleague alluded, there's still the whole wars between Russia, there's Iraq, there's China, there's the USA. All these are not yet resolved. And looking also at these geopolitical factors, they don't seem to be looking like they're going to be resolved anytime soon. Okay. So as I said, this is aligning with what's currently there in the market. So the policy, so there's a delicate also where there's a delicate macro balance with results in soft landing. We have consensus policy easing as well as persistent uncertainty. This scenario may not be bullish enough for a surge in the gold fees, but however, it's also not benign enough for any correction to happen. So I think scenario 3 is likely to continue. If there's anything that could be happening, the situation may not deteriorate, but there could be there could be a correction where if the geopolitical factors are resolved, the gold price may just come back to its normal price. Yes, but if there's no that, I think scenario 1 is the most probable one to happen in the second half.
Tapu, which scenario do you think is going to play out in the second half of the year?
Yeah, I concur with my colleague. Geopolitical crisis is one of the major drivers of the current trajectory of gold price. And it seems as if those conflicts will prolonged and will be there for a very long time. You know, the President of the United States of America is throwing sanctions day in, day out, and trying to cause havoc around the globe. So I do believe that the gold price will remain skyrocketing in the near future, and there is no sign for reversion yet till those issues are ironed out.
All right, still on that, Tapu, in the report, the bull case predicts up to 15% further gains in gold prices, closing the year almost 40% higher. What indicators should African markets watch to assess this possibility, if that is something that's if that's the situation or scenario that's going to play out? What do African markets need to watch?
I do believe that investors in Africa and other countries must watch things like the patterns of capital markets in developed countries, or like United States of America. As long as those capital markets continue to shake, we have a high probability of seeing a continuous improvement or a continuous increase in price of gold, because a lot of investors, both retail investors, also investors, those investors from Middle East, the sovereign states, they'll continue to put a huge pressure on the price of gold as they demand more. So I do believe that we are going to witness a upward trajectory in terms of price of gold for a
long time coming. All right. And Natasha, both of you are talking about diversifying, looking at maybe other minerals to hedge on. How does gold compare to other commodities like oil or copper in terms of safe haven demand for 2025?
Okay, for 2025, I think currently with the scenarios that we have all just recently discussed, I think gold is doing well as a safe haven. In as much as I understand the Russia wars and politics that's happening, they've also affected the oil and its prices. And I think other things such as wheat, if I'm not mistaken, are also affected in that time. But looking at the gold issue, when I'm specifically looking at our country, because it has resulted, one of the things that has resulted in the reduction in the gold price has been the weakness of the US. And like he alluded before, he mentioned how the President of the United States is continuously releasing tariffs, is continuously releasing sanctions that are also affecting this the strength of the US dollar. So us as a nation, we may benefit more by accumulating more gold, and it's a better safe haven for us because we already have the USD in our country, and because it's now cheaper, it's better for us to buy now, and we hedge against any risk right now, because if I'm not really sure of how best we've been doing with the oil, so that's why I'm more reliant on the gold market.
And on another note, the gold market is counter-cyclical as compared to the oil market and that copper market, because those commodities, they follow the business cycle, while gold is counter-cyclical and it not follow the cycle. As the economy sinks, the value of gold always improve. So we are in a good environment with gold.
All right. I just want to ask either of you one question each and answer very shortly because we're running out of time. Are younger or retail investors globally showing renewed interest in gold, or they're still gravitating towards alternatives like cryptocurrency? Tapu.
All right, thank you. I think briefly, I have a mixed feeling on that, but what I believe due to the dynamics of the technological world, younger investors, they are resonating to investing in cryptocurrency because they love crypto assets. They love, because one of the cryptocurrencies like gold coin is regarded as digital gold, so it's almost equivalent to gold in their minds. So yeah.
All right, I think we actually had so much to say on this conversation that we are running out of time. But I have to thank you, Natasha and Tapu, for gracing us today on The Mint.
Thank you,
thank you
Cecilia,
so
for also hosting us.
All right. Now, that is all we had in today's episode of The Mint. I'm Cecilia Kamputa. Good afternoon and pleasant viewing.